Hello, and thank you for watching. My name is Stacy Blodgett, and I am the Chief Executive Officer and a Certified Financial Planner Practitioner with Globe Wealth Management.
Hi, my name is Regina Kojan. I'm the Chief Investment Officer at Globe Wealth Management. I'm also a Certified Financial Planner Practitioner.
On June 15, 2019, the Securities and Exchange Commission adopted some new rules called Regulation Best Interest and referred to it as REG BI. So REG BI establishes a new standard of conduct for financial professionals when making a recommendation of any securities transaction, which could include the buying or selling of stocks, bonds, exchange-traded funds, or other investments of any sort. Also, if you establish a specific investment strategy with financial planning or consulting for a client or prospective client. When making such a recommendation, a financial professional must act in your best interest when making those recommendations without placing their own personal or financial interests ahead of yours.
So there are 4 components to Reg BI, and we follow these. The first is disclosure. So prior to or at the time of a recommendation, we give you Form CRS, which is the Customer Relationship Summary. This form outlines all of the rules. This document can also be viewed and downloaded from our forms gallery on the website www.globewealth.com. 2 is care. We exercise reasonable diligence, care, and skill when making a recommendation. 3, conflict of interest. We establish, maintain, and enforce written policies and procedures designed to address the conflicts of interest. And compliance. We establish, maintain, and enforce written policies and procedures designed to achieve compliance with Regulation Best Interest.
To provide insight and information on how our firm, Globe Wealth Management, observes the 4 obligations of Regulation's Best Interest and how we act in your best interest, we have created a video series to address the topic and how it affects you when you're looking to partner with a financial professional. The first video in the series addresses what type of investment services you provide. And so an important question to ask your financial professional is, given my financial situation and investment objective, should I choose a brokerage account, an investment advisory service, or a combination of both?
So at Globe Wealth Management, depending on your needs, we can do either a brokerage services or investment advisory services account, and sometimes both. Let's start off with a brief explanation of the differences between the 2 types of accounts. A brokerage account allows the purchase and sale of investments with the payment in the form of a sales charge or commission for each transaction. It's transactional based. Securities can include stocks, exchange-traded funds, which are known as ETFs, bonds, fixed income investments, mutual funds, and alternative investments. You can select the investments, or we can make a recommendation for you. However, the ultimate decision for the transaction is yours. It's important to understand that in a brokerage account, ongoing monitoring is not part of that. It's not provided. There's no minimum dollar amount set up a brokerage account. Advisory account, on the other hand, encompasses several different things: financial planning, consulting, asset management. The cost can be based on the value of your assets under management or as a fixed or hourly fee. A financial plan is a comprehensive review that documents your current financial situation and long-term monetary goals. This includes retirement, estate, education planning, risk management, tax strategies, and investment management. The plan creates a roadmap to work towards achieving your goals. A consulting relationship is the review of maybe a specific goal or problem that is analyzed in a recommendation made. So, for example, if you're trying to figure out if you are getting a new car and want to release it versus buying it outright or taking a loan, that would be an example of that. Asset management is when you have a financial professional manage your investment portfolio. This is based on your risk tolerance, your time horizon, and your investment objectives. And we create a portfolio based on the criteria for you. This can be done on 2 different ways, either discretionary or non-discretionary. So what that means is that if we have discretion, we can execute the trades on a client's behalf. And again, it's based on their risk tolerance, time horizon, and risk tolerance. We don't need to call and get your permission prior to making a trade or rebalancing the portfolio. With a non-discretionary account, we need to get your permission prior to executing any trades. We'd have to call and confirm before making any changes. Most advisory programs do have a minimum investment amount. There is also ongoing investment advice and monitoring of the investments within the account. Advisory clients also have regular meetings with their investment advisor. We review your goals and monitor the performance of the portfolio and see if any changes need to be made, based on any changes in your life. So Stacy, can you explain what are the differences, and is one more suited to a client than the other? If so, why?
Yes, the difference is that a brokerage account is a transactional account where you pay a commission when you make a decision to buy or sell an investment. There's no ongoing monitoring of investments by your advisor. Therefore, you need to continue to pay attention to your investment and follow it closely to make any future decision regarding the investment. So what type of investor may utilize a brokerage account?
So with a brokerage account, it would be someone who prefers to make their own investment decisions, an investor who has selected to pay, they'd prefer to pay ongoing, trading costs, ticket charges for the commissions, an investor who has opted not to engage in ongoing monitoring of their portfolio, an investor who has no plans to sell their holdings. If they buy stock and they want to keep it forever, that would make sense in that type of account. An investor who does not meet the minimum requirements of an advisory account. It's a good starting point. So Stacy, what type of investor would utilize an advisory account?
An investor would use an advisory account if they wanted to partner with a professional to manage their assets based upon goals and risk tolerance, and continue to have monitoring of the portfolio provided and recommendations on an ongoing basis. An investor may prefer the advisor make the trading decisions on a discretionary basis so they don't have to follow research and do all of the work in order to select a different holding. An investor who prefers a consultative approach to work on their financial well-being with another individual. An investor who wants to engage in financial planning services in order to create a full financial plan for themselves. So another question that you may ask a potential advisor is, how will you choose the investments that you recommend to me?
So as our chief investment officer, that's a focal point of my job. So when we do that, we gather the information about you, as we mentioned earlier, your risk tolerance, your time horizon, your goals. We also look at your liquidity needs, your income, and other assets that you may have. We rule out anything that's not appropriate for you based on your circumstances and the information that you give us. For example, some investments may involve higher levels of risk or may be illiquid or may be not appropriate for certain reasons. Each portfolio is screened for asset allocation and some other statistical analysis. Our goal is to optimize your risk-adjusted return. It's important that you give us, disclose all your information, completely and accurately, as these factors affect how we would make your investments. So a good analogy is if you go to the doctor, they're going to ask you, check your blood, do some tests and things like that to figure out what the best prescription maybe that you need or the best course of action. They're not just going to start, giving you a prescription without doing all of the due diligence. We use mutual funds, indexed and managed ETFs, annuities, and stock. We also have access to institutional share classes and no-load funds, which are important. So Stacy, if you recommend a third-party investment manager, how would you select that?
Sure. So during the review process with the client, we determined if adding the third-party manager made sense and was appropriate for them by deciding what kind of diversification they wanted, what their goals were, and we may utilize it for a client that has a larger portfolio to round out the other investments they have. In some cases, we would require the client to have a specified level of income, a specified level of assets, and a total liquid net worth in order to recommend a third-party investment advisor for them. So we review the managers to see what their management style is, what their historical performance has been, and then we utilize that to help the client, look to reduce their risk-adjusted return. And as long as it meets our criteria, we would then suggest it to a client. Another question you may ask would be, what is your relevant experience, including licenses, education, and what do the qualifications that we have mean?
So together, it's hard to believe, we have more than 35 years of industry experience as investment advisor representatives. We both have the Series 7 securities registrations. I have the Series 66 securities registration, and Stacy has the 63 and 65 securities registrations. We're both certified financial planning practitioners. So Stacy, based on your licensing and other qualifications, are you limited by the scope of investments that we can offer?
So Regina and I have worked in the financial services industry for a long time, and we both have been with different companies in the past. So we learned a lot along that path. And now as independent advisors, we've been able to achieve high levels of education and training, and we have multiple registrations. So with those, we have access to a wide variety of investment options that are not proprietary investments, and we don't use proprietary investments within our portfolios. So we're not beholden to shareholders of a publicly traded company. We work on behalf of our clients and for our clients. So another question you may ask is, how often will we monitor your account's performance and offer investment advice if you have a brokerage account or an advisory account?
So within a brokerage account, we set up meetings with clients to review their account and answer any questions that they may have. We're available if they want to reach out, if they want to place a trade or update information. Just keep in mind there's no ongoing monitoring of the investments within a brokerage account. In an advisory account, investment management and financial planning services are ongoing. Portfolios are continually monitored and updated as needed. We have the ability to trade on a discretionary basis. In addition, we do schedule regular client reviews to update any necessary changes to your investment strategy. Advisory accounts is a partnership where we put ourselves on the same side of the table as our clients, and we're part of your team.
In closing, we've asked some questions that clients or prospective clients should ask of their financial advisor, and we've gone through some dialogue to help answer those questions. So the goal of this is to give you some information to help you make an informed decision when investing or hiring a financial professional to help you with managing your investments.
The video series can be found on our website, globewealth.com, under the tab Our Commitment to Our Clients. It is also posted on our YouTube channel, Globe Wealth Management. Be sure to like and subscribe, click the bell to be notified of any new content. Thanks for joining us.
Thank you.